Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Mark Browning, who's CEO at Zinc Media. How are you today, Mark?
Good, thanks for having me.
Right, it says here that you're a premium television content creation group. Maybe you can tell us how well you're doing at the moment, given that recent headlines and research reports are saying you're at record trading levels.
Yeah, so we're a content production company across a whole range of different content, of which television is part of it. But increasingly, content now comes in any size, length, form, price, screen, and we produce for all of those options across brand work, TV commercial work, event work, some television, podcasting, audio, the whole kit and caboodle, and across different markets. And yes, we've had a good run. So all of our profit metrics are up for the fifth year in a row, and our revenue is up just around 28%, along with our EBITDA numbers, a similar number. So we've had a good run, and that's because we're a highly diversified content group.
From a layperson's point of view, I'm sure everyone's sitting there spending most of their day, too much of their day, watching Netflix, ITVX, etc. You would imagine that there are now probably too many channels and not enough content, a bit like the situation initially at the time of the dot-com bubble. Are your services in demand on that? Is there actually sort of a drought in terms of the type of premium content that you produce?
Yeah, the consumer now, of which we're all choosing our platform based on the program that we want to watch, actually, and we're paying for that accordingly. So we might go to Apple to watch Slow Horses, we might go to Paramount to watch, a modern drama or something like Yellowstone. We might still go to the BBC for sport or for factual or for current affairs or for documentary, and ITV for entertainment. So we all know where we want to go for a type of program or a type of show. That puts, in my view, the content producer at the forefront of the sector rather than the channel per se. So if content is driving consumers, and premium content particularly drives consumers, and you're in the content making business, you have a product that is in need. There are also plenty of producers around the world, but there are an increasing number of channels. So we have lined up our group to produce content for any brand or business or channel. And we produce for the likes of Disney Plus, but we'll also produce for a major global brand. And they also want to tell their stories increasingly on a screen and increasingly in a premium documentary style way. So some of our biggest work is actually for multinational brands that never hits a TV channel. Another might be for Red Bull, for example, which is on Red Bull TV. And some of our programs might just appear on BBC One or Channel 5 in the UK. So it's a whole plethora of different output.
Right, you mentioned Disney Plus, which implies to me that Hollywood knows about you and thinks you're a bunch of good eggs. How much of what you do is related to you being able to shout louder than the other guy, you being able to get your marketing and sales machine up to scratch?
Yeah, for TV and streamers, it is a relationship business as well as an ideation business. So you have to have the relationships with all the channels at the right levels. And then you have to have a response to a need. And in the case, let's take the Disney Plus commission that we have. It's called Top Gun's The Next Generation. And it is the real version of the movie. And there's quite a lot of television like that at the moment, where you get the drama or the film, and then you get the real life stories. And that's happened across everything from Band of Brothers through to Narcos, and in this case, Top Gun. So we, as a premium factual storytelling division, we don't make dramas, we don't make movies. We were commissioned to make the real Top Gun, to be embedded inside the US military, to be able to put cameras inside F-35s, to be able to completely get under the bonnet of actually what was going on inside the military. And that allows us to tell the real life Top Gun story. So it is both need and response to need. It's about being trusted. Zinc's company of labels, we've interviewed every president since Nixon. We are globally known to be trusted to get inside the most complicated places in the world with some of the best stories. We've been inside the White House and documented it. We've been inside the US military and documented it. So that is part of our DNA. So to your point about does the world know about us, those that buy our kind of product know where to come inside Zinc. And all of our companies operate on the same platform. We have 12 different brands, and the buyer knows that if they want a certain type of product, where to come inside our shop. So if they want a premium documentary, they might well go to Brook Lapping. If they want a premium event, they might go to Super Collider. If they want a TV commercial and they're in the Middle East, they might well go to The Edge, and so forth. And so it goes through our portfolio. And that's how we get to win business.
The research report I read, the Edison one, mentions you've got a pipeline of approximately £30 million. Is that a big enough number to last you out for like the next 2-3 years? Is that a decent pipeline?
So that pipeline is for work that could all land in this year, in FY26. So the way that businesses like ours work is that you win a piece of business and then you book it according to activity when you're in production. And you are often cash flowed by your clients. In fact, you're always cash flowed by your clients if they pay on time, according to a series of deliverables. So that 29 million is not our total pipeline in totality across the future years. It's the amount that could fall based on our production schedules and based on what clients have said they want deliveries that could fall into this year. There is then more of the pipeline that would obviously fall into future years. So some of those shows, if we were to win them and a proportion of that 29 fell in this year, they would bleed forward into 2027 as well. But we only report the pipeline based on at this stage of the year, based on our market forecast for this year.
In terms of the numbers, which are probably worth crunching a bit, given the end part of my question, fifth consecutive year of revenue growth, up by 28% to 41 million. As you said, the pipeline there, 29 million. Market cap at the moment, 10 million. Does that mean that somebody listening to this podcast will say, well, actually, they've got these numbers which are 2 or 3, 4 times their current market cap. This looks like a bit of an opportunity. Is that the way that we should be seeing it?
That is the way we should be seeing it. And as an investor myself, that's the way I see it, because media stocks generally, let's talk about the market first of all. AIM is obviously at a low point. So it is arguably a good time to be investing in an AIM-based stock. AIM typically values high growth companies. We are a high growth company. Media stocks are devalued at the moment, are low at the moment, and that's true across the board. If you look at the large end, ITV Studios through to STV, through to Zinc, from Future, etc., there are plenty of illustrations of where these stocks are undervalued. So you then got to look at it, go, well, hang on a minute, if they're undervalued and the market is down, which ones are performing well against that market? And Zinc is one of those, with revenue and EBITDA up 28% accordingly, but also adjusted operating profit up 14% and gross margins holding up well. So you go, okay, there's a company here that is on the screen undervalued against a low valued market. Peers are valued similarly down. So which ones are performing well? Well, Zinc is, therefore it represents a good opportunity. Typically a business like this would be attracting an EV EBITDA multiple of somewhere around 7 or 8, and we are bubbling around at around the 5 times mark. Or it would be valued at a price based on turnover. If AIM was valuing growth, it might be 1% of turnover, which would be 4 times our current value. So somewhere in that range is the opportunity towards the upside based on our current price.
So is there any explanation as to why media stocks are poorly rated or relatively poorly rated at this time, given that we're all, as I was alluding to before, sitting on the sofa watching TV, it's on our phones, it's everywhere, iPads, etc. Doesn't it seem to be a bit of a disconnect with reality?
I think it is a disconnect completely, and it's partly caused by a misunderstanding around things like AI. I think the markets tends to think that AI is going to eat content producers' breakfasts forever, which I just don't accept is happening or will happen. It will, of course, change the way content is produced in the same way that the ebook didn't demolish traditional books. It took a 15% slice of the market. It didn't suddenly mean that we weren't all buying books. The same principle, I think, applies in television production. We use AI now in 4 or 5 different ways within the organization to improve efficiencies, to improve speed, to take out cost. But more importantly, and I reference this in our results, that the AI sector as a big new market needs to tell their own stories. And actually, in the last 12 months, we have won about £3 million of business related to AI. That's far, far more than we would have ever lost from any amount of AI content creation, significantly more. We've won £3 million from a sector that's booming. Why? Because they have stories to tell, and we are storytellers. We did an AI TV commercial last year, we did an AI training film, and we did an AI event. So for me, AI actually is an opportunity for storytelling companies to enter new markets. But I think the reason that the value of the company has become increasingly dislocated from the performance of the company is actually nothing to do with the performance of the company itself. It's to do with the fundamentals of the wider investment market, including some misattribution around the threat of AI.
So in a way, the main takeaway of the AI point is really just it improves your margins, and that's probably all we need to know at this stage.
Yeah, it's a new market that we can produce for.
I'm reading that you've had a record year. Presumably, you've got one or two things you're aiming for in 2026. Is there any sort of things that you think you could tell us that it'd be nice to have this, nice to have that, or nice to be doing this or that?
Well, we want to extend our product genres. Last year, we made an explicit intent to move into entertainment, and we won a large BBC Saturday night quiz show with Amanda Holden. That has been recommissioned for this year. And so now we're extending out our genre diversification, not just to include entertainment, but to include events, event production, not putting on the event per se, but telling the story for the event on the screens at the event and beyond the event. And we're diversifying more into exploiting our owned IP, where we own our own rights to our own shows, and turning those into the new consumer-facing digital world where we can put our content on YouTube and on socials, and we can get monetization from either subscription or advertising. So we're extending in our product, we're extending in our geographical outreach. Last year, we prioritized the Middle East, and we've done very well in building out our portfolio of businesses in the Middle East. We've been trading in the Middle East for 20 years, and we have launched 2 new businesses across Qatar and across Saudi, which, remember, before the war, and this will be the case when it comes to an end, are growing at 6 times the pace of the UK. But we're adding into that now US expansion over the next 12 months. And our IP is a big area that we intend to continue to grow into. We want to take our typical distribution IP, where we own a program and we sell it around the world. We've launched Zinc Distribution, which is a distribution company aiming to exploit our own owned IP, sell it ourselves, which means we're no longer giving away the 30% that we currently give to other distribution companies. We're going to try and do some of that ourselves, as well as exploiting it digitally. So it's quite a good trajectory of new growth opportunities outside the core UK market.
Well, we look forward to watching Amanda Holden on your program. But in the meantime, Mark Browning, CEO at Zinc Media, thank you very much indeed.
Thank you.